Hi class, a pleasant day to all of you. This is your Professor Dan, and in this video we are going to discuss Budgetary Planning Part 2A. Okay, there are several parts under Part 2. We have A up to D, okay? And then class, the topic is illustrate sales, production, direct materials, and direct labor budgets, and factory overhead and sales administration budgets. Okay. So part A will discuss sales and production budgets, and then part B will discuss direct materials budget. Part C will discuss direct labor budget, and then part D will discuss factory overhead and sales administration budgets. Okay. So here class, in part A, we will discuss the lessons are flow of developing operating budget, second, development of sales budget, and third, development of production budget. So let us start. So we are going to develop budgeted income statement, okay? And under income statement, we will use the absorption costing in presenting our income statement, wherein we have our sales less the cost of goods sold. And the cost of goods sold will consist of direct materials, direct labor, and factory overhead. Okay? So sales less cost of goods sold will give you your gross profit, and then less expenses, which are selling and administrative expenses. We will use the functional expenses in our illustration. That will give you your net income. Okay. So plus, in developing operating budget, we have first to consider or develop a budget for our sales. Okay, so let us develop the sales budget. Then, based on your sales budget, we will have to develop the production budget or manufacturing budget. Okay, in production budget, we will determine the budget for the number of units to be produced based on the number of units to be sold, which will be in the sales budget. Okay, now after determining the number of units to produce, okay, since that it is based on sales budget, we will now have to project the direct materials that will be needed on the units to be produced. And then we also have to come up with the budget of direct labor for the number of units to be produced and the factory overhead for the number of units. Okay, so class, basically this is your manufacturing cost, okay, for the number of units to be produced. However, it is not guaranteed that everything that you have produced will be sold. Okay, so there we have learned how to compute that. So class, here the product cost that we are referring is actually for the in general. Okay, this will be your product cost. However, for your cost of goods sold, these are the units to be that were the cost of the units that were sold. Okay, and we have learned in the previous discussions, okay, how we can compute that. Okay, so class, we also have to do a projection or a budget for our selling and administrative, in addition to our sales budget, production budget, direct materials budget, direct labor budget, and factory overhead budget. And similarly, we are going to base our expense budget from sales budget. Okay, so that will be the primary consideration in developing our selling expenses and administrative expenses budgets. Okay? Okay, class. Let us now discuss the development of sales budget and production budget. Okay. So class, your sales budget, we have to present this in amount. Let us use the acronyms SB for sales budget. So the formula for the sales budget or the sales budget in amount will be the number of units to be sold. Okay, so here let us use the acronym units sold, US, times the selling price per unit. Okay, SB. So in this case, your sales budget, which is SB, is equivalent to US units sold times the selling price. Okay, so class, the production budget will now be based on your sales budget. So production budget is determining how many units to be produced based on your sales budget. So we can have this formula, the number of units to be produced, okay, which is equivalent to, we have to consider basically the number of units that can be sold, okay? However, we have to know also the inventories, okay? Because the inventory we have to is a consideration in determining the number of units to be produced. So this will be the formula to calculate the number of units to be produced is that number of units sold, you have to add the inventory end. Inventory end is the desired level that you would like to maintain at the end of the reporting period. And you have to deduct the inventory beginning, which is the beginning from prior year. Okay. So here, based on sales budget, the units to be sold, and your inventory end is the desired level of inventory that you would like to, the company would like to maintain, normally based on next period's projected sales. Why? Because the first part of the next period, okay, you need to have sufficient inventory on that so that there will be no loss of sales, okay? To make sure that you have sufficient inventory for the next period. And then you have to deduct the inventory beginning. So normally, this inventory beginning is based from previous period's inventory end. Whatever the end from the previous period, that will be the beginning for the current period. Okay. So these are the things to consider in developing sales budget. Sales budget represents best estimates of sales revenue. So here we have to determine the number of units to be sold and the amount of sales, okay? The projected sales budget should consider market analysis, the market prospects, the product, whether we are going to develop a new and renovated products or we need to eliminate obsolete or old products. We have to consider the customers and the historical data of our sales. Sales budget is the starting point in the budgeting process as it serves as the basis in preparing other budgets. So, class, it is really very critical that we will develop our sales budget uh, as to more or less near to its 100% accuracy, okay? Because that will serve as the basis in other budgets. Sales department and marketing department coordinates the development of sales budget. These are the two departments that make sure coordination is properly undertaken in the development of sales budget. Let us illustrate sales budget with this situation. Stylish Furniture Company has the following data and assumptions in the development of sales budget for 2021. The products of Stylish Furniture are as follows: tables with selling price of 8,000 per unit, chairs which is being sold at 900 per unit. Okay? Stylish assumption projected that sales in 2021 in 2022 will increase by 10% every year. The projected sales will be based on the 2020 actual sales data. So this is the actual sales data for 2020. Take note, class, that uh, the years here are, we have the 2020 actual data. We are developing a budget for 2021. And the assumption made for both 2021 and 2022 will the sales will increase by 10%. So here, class, uh, the uh, the breakdown, okay, of the units sold, okay, per branch is that 60% of this units sold is from branch 1 and 40% is from branch 2. Okay? So required, we will prepare sales budget for 2021 presented per quarter and per branch. So that is the requirement. 2021 budget and broken down per quarter and per branch. Okay. Let us develop the budget. Stylish Furniture Company sales budget for the year ended December 31, 2021. So this is our heading. Okay. So since we are going to present this per quarter, so we make sure that your sales budget provides information per quarter. And then in units, first we have to determine in units. Okay, before it's best that we have to start with the number of units because the amount will be based in units. Okay, so in units, we have to uh, determine now the branches, okay, that will be selling the products, which will be branch 1 and branch 2, and the products of the of stylish furniture are tables and chairs. Okay, so for the assumption on 2021 is that there will be an increase of 10%. So all of this data, we will increase it by 10% and then segregate according to branch. Okay? So here, for your tables on branch 1, quarter 1, okay, the calculation will be quarter 1 is equivalent to 60 times 110% because we are increasing it by 10%, and the share of branch 1 is 60%, and that will give you 39.6. And if we are speaking in units, there is no fraction, of course, in units, so we have to round that off to 40, okay? So our presentation and our sales budget in units should be rounded off. There should be no decimal places, okay? Because you cannot sell incomplete unit, okay? Zero point 0.6 would mean it's not completed. So here, the for quarter 1, branch 1 for table is 40, okay, based on our calculation. Okay, then for tables, branch 2, okay, same thing. We will be applying the same calculation, except that branch 2 is 40%. Okay, so 60 is the number of total number of units times 110% times 40% because that's the percentage of branch 2, and that will give you 26.4 or 27. So our tables for branch 2 is 27. For chairs, for branch 1, quarter 1 will be 150 times 110 times 60%, and will give you 99. So we will have here 99. And then for branch 2, okay, this will be our calculation. So branch 2 share on sales is 40%, so that's equivalent to 66. Okay. doing the same process of mathematical calculation, we will have this. Oh, by the way, if we are going to total, it's best that we are going to total it. But you make sure that you will total it per product because it doesn't serve any purpose if the total is combined for tables and chairs. So your total should be on a per product basis because it is more useful. Okay, doing that on all quarters, you will have this. Okay, so now we are done with the sales budget in units. So the company should also prepare sales budget in amounts because the company is definitely would like to know how much sales will be generated in terms of amount. So here you just have to multiply by the selling price. So 40 times the selling price of 8,000, that will give you the respective amounts, okay? And for the chairs, 99 times 900 per unit, it will give you 89,100, okay? So here you have here the subtotal. You can put here the subtotal, and it is best also doing the mathematical calculation, you have these amounts. And in total amount, you can segregate tables and chairs. Here it's best that you can do a sub because this is a meaningful, the subtotal for tables and chairs in amounts, okay? So you will know that the sales for branch 1 for quarter 1 is 409,100. And for branch 2, it's 275,400. So you can get the total of these two branches. Okay, and doing the mathematical calculation for the rest of the quarter and for the total for the year, you will have this. Okay? Okay, class, so let us proceed and now let us take a look at the production budget. So the production budget provides the number of units to be manufactured. The production budget is based on the number of units per sales budget, okay? So this is what we have in units per sales budget, okay? So now what we will be needing is this, okay? The total units that need to be produced, okay? For chairs, we have 333 units, and for tables, we have 333 units, and for chairs, we have 1,100. And this total is broken down on within the 4 quarters of the year. So production budget is developed by the production or manufacturing department in close coordination with sales department. So class, the formula in calculating units to be produced, as we have discussed, will be the number of units to be produced is equivalent to number of units sold plus inventory end minus inventory beginning. Okay, so class, for stylish furniture, we will be using this assumption. The inventory level of inventory end should be at least 15% of the next quarter's sales. Okay, this is the assumption that we are going to use. So here, class, our inventory end is 15% of the next quarter's sales, and inventory beginning, of course, will be based from the previous period's inventory end. That will be the beginning for the next period. Okay? Whatever the ending period's inventory, that will be the beginning of the next period. Okay. So here, class, uh, this type of presentation, by the way, is being done in the office, okay, wherein you have to make a statement, okay? Like in what we have done, we did a statement of sales budget, okay? And the formula is basically used in for classroom purposes. So let us do an illustration of the production budget. Again, our assumption is that inventory end is at least 15% of next quarter's sales. So here, um, in the offices, you will be asked to do a production budget in this format. Okay, you can use Excel in doing the production budget. Since that we need to present this per quarter, so we have to have a column for each quarter, and then the information per product. Okay, so here for tables, the units to be sold. Okay, plus take note, we don't need to present this per branch because we are manufacturing the number of units. The assumption is that we are manufacturing the number of units in one production area. Okay, so the units to be sold based on our sales budget are 67, 55, 78, 133 for quarter one, quarter two, quarter three, quarter four, respectively. Okay. And for inventory end, okay, now we have to add inventory end. And the assumption of the inventory end is at least 15% of the next quarter sales. So for quarter one, it will be 15% of 55 next quarter sales. So in this case, inventory end for quarter one is sales on quarter two times 15%. That will be 55 times 15% is equivalent to 8.25. Again, since that we are talking here of units, we should not be using decimal places. Okay, we have to round it up, always up. Okay. So in this case, our inventory end is 9. Okay. And now for quarter two, we just have to do the same calculation, which is uh, 78 times 15% will give you 20, and then 133 times 15% will give you, okay, 133 times 15% will get 20. Okay. Now, what will be the inventory end for quarter four? So for quarter four, you will base it from 2022. Okay. And how are we going to determine 2022? Since there was no given data. So we can compute that based on quarter one, because the first quarter of 2022 is quarter one. So we will be using the available data of quarter one, and we have in our assumption that for 2021 and 2022, there will be an increase. Okay, so we will be using 67, okay, times 110, okay, and then this is how we will be computing it. Okay, so the inventory end of quarter four is 12. Okay. And the total of this is 53. And now we are going to consider now or deduct our inventory beginning. So our inventory beginning here for quarter one, since that from previous quarter, the end on the December 31, 2020 budget, the quarter 4 of 2020, that will be based at 67. So here, our beginning for quarter 1 will be 15% of 67. Okay, so here, quarter 1 will be the sale on quarter 1 times 15%. That will give you 10.5 or 11. Okay, so that will be your beginning. Okay, so now this is the end of quarter one. So your beginning for quarter two will be that, which is 15% of 55 also, okay? Because this 9 is based on 15% of 55. Okay, so here you will have to consider the ending of the previous quarter as the beginning of the next quarter. Okay, now you have here the total. Okay, so tables to be manufactured are these amounts. Okay. Now for the chairs, you will just have to do the same mathematical calculation and you will have this chairs manufactured. Okay. So based on these production budgets, you have tables to be manufactured for 2021 at 334 and chairs to be manufactured for 2021 at 1,103. Okay, let us continue. Class, normally this format that we have just presented, we will be doing this for offices. For classroom problems, okay, there will be questions, okay, which you don't need to do the format that was presented from the previous slide. You just have to make a calculation. Like in this case, determine the number of units to be manufactured if you are given like this. And then the assumption here is different from the previous slide. The assumption that we had from previous slide is that the assumption one is inventory end is at least 15% of the next quarter sales. But here, the assumption that we are going to use to illustrate a production budget using the formula is that we will have a specific amount of inventory end and inventory beginning. So how are we going to calculate now the units to be manufactured? So here, if we are going to calculate it that the total units for the year, which is 333 for the table, okay, this will be our formula. And tables to be manufactured, the number of units to be sold is 333. And based on what is given, we have to add the ending inventory, and the ending inventory for tables is 60. And we have to deduct the beginning inventory, which is 50. Okay? So here, the units to be manufactured, doing the mathematical calculation, is 343. And for the chairs to be manufactured, units to be sold is 1,100 plus ending inventory of 170 minus beginning inventory of 165. Doing the mathematical calculation, you will have chairs to be manufactured of 1,105 units. Okay? Okay, class. There will be problems, class, that it's not the units of manufacture that you need to compute. Like in this case, the production budget shows expected unit sales of 455,000. Beginning finished goods is 105,000 units, and the units to be manufactured is 389,000. So the units to be manufactured is already given. What is not given is the desired ending inventory. So you need to compute that. Doing the using the formula, which is this, units to be manufactured equals units to be sold plus ending inventory minus beginning inventory. Then if we are doing the substitution, we will have this, okay? And what we are computing will be the ending inventory. Okay, we have to use now our algebra, which is the transposition, to solve this, okay? To use the transposition, we have to, all those with given amounts, we have to transpose it to this side, like 389. If we are transposing, we will change the sign Here in this case, it is positive of 455. So when we transpose it on the other side, it will be negative. So 389 minus 455,000. And we will add now this beginning inventory because it has a negative sign. Okay, and transpose it to the other side. So in this case, you will have 389 minus 455 plus 105. That will give you your ending inventory. Okay, and doing the mathematical calculation, your ending inventory is 39,000. Okay, class? So class, if there are questions, please let me know. Have a nice day and bye for now.